In this video, I'm going to show you guys how a perfect trade turned out to be a loss. So stick around and watch to the end. All right, so let me just start all over again from the higher time frame, right? So if you go to the 4-hour time frame, you can see that AUD NZD has been going to the downside for a long time. Since September 2022, we've seen the market creating beautiful lower lows and lower highs, right? And then when you come to this particular 4-hour time frame, when you zoom it out right now, you can clearly see a beautiful rally base drop supply zone formed by big momentum candles to the downside, which broke structure. We also had equal highs which were left behind right here, and then from that you can actually see the market moving in our direction in a beautiful compression right here. All things that I always look for in the market, right? And then we came here, and if you drop even further to the lower time frame, you can actually realize that we had a beautiful order block which was left behind right here. This level right here, we got that level there as our order block. We waited for price to come to that level, and once price came to that level, we were able to take this trade. And you can see what we had here. If you actually turn on that bell notification, this indicator right, you can see that the high of the Asian session was taken out, right? And you can clearly, if you come here, you can clearly see that the market gave us a beautiful rejection right here. We had a beautiful rejection of this candle right here. We saw a nice rejection. We had a nice bearish pin bar right here on the 50 minutes time frame. This one right here, a bearish pin bar, and we didn't just get in after that bearish pin bar. After that, we waited for the close of that bearish pin bar. You can see that the market didn't close below this one. The market closed bullishly, therefore we didn't enter. Okay, we waited patiently, and you can see that after that the market pushed to the upside again. After pushing to the upside, the market created what? Created an equal high right there. And then after this high, after the market came to this level, then I wanted the market to break this level right, and see what happened. The market broke this low right here with a candle, and then that was my entry right here. So if you drop even to the 1 hour 1 minute time frame, you can see that after this break right here, we entered on the next candle open. The market just dropped a little bit in our direction and then pumped to the upside, and we were taken out for a loss. And this was the last trade of the week. From the higher time frame all the way to the entry, this was a perfect trade setup. This is something that I can take any time of the day. And we waited patiently for this trade. We waited for all the right things to happen before we could take this particular trade. What is my point? I'm sure you figured it already, right? Regardless of how the trade is, regardless of how perfect the setup might be, on a trade by trade basis, you have no idea what's going to happen. It can have all the confluences that you want in the market. You can have all the confluences that you need in the market. But guess what? You would never know what's going to happen. You can see the rejection was right there, a beautiful rejection of this level. We took this trade in our private community, but it turned out to be a loss, right? The market still ended up going to the upside, and we were taken out right here. Despite us having all the confluences that we always follow in the market, this trade turned out to be a loss, right? So on a trade by trade basis, like I always emphasize, you will never know what's going to happen. And it's not even in your job to actually know what's going to happen, because you never know what's going to happen. There's literally no way for you and I to know what's going to happen on a trade by trade basis. Unfortunately, most of us come with a mindset of thinking that maybe we might know, maybe there's a way to know what's going to happen. You will never know. Hence, our age plays itself out over a series of trades. On a trade by trade basis, there's so much randomness, and yet us as traders, we want the market to conform to our ideas, right? We want it to perform according to what we want, but it will never do that. And if we try and do that, that will be a greater source of stress in the market, and you don't want to do that to yourself. On a trade by trade basis, anything can happen. You have no idea what's going to happen. There is a random distribution between wins and losses in any given set of variables that define an edge. Your strategy doesn't tell you in what series the winning trades are going to come. Never. You're never going to know what's going to happen on a trade by trade basis. If we knew, someone would just go and get a loan and put everything on one trade and make a shit ton of money and then stop trading, right? But no one does that. No one really does that because we understand that anything can happen. And if you understand that anything can happen, therefore you're supposed to predefine the risk, accept the risk, and start executing your edge. Make sure you're executing your edge flawlessly, right? Because that's the only thing that we can control. We have no control over the outcome. We have no control over what the market is going to do. The things that we can control is us following our strategy to the T, making sure that we are trading in the direction of the trend. Make sure we have valid levels you're trading from. You have all the things that you're looking for ticked. Then you can take a trade. The moment you take that trade, you've lost control. You've lost control over what's going to happen on that particular trade. And that means you're supposed to accept the risk in advance and have a long-term mindset, because on a trade by trade basis, you are never going to know what's going to happen. Trust me, if you try to you're trying to find out what's going to happen in the market, trading will be the hardest thing that you've ever encountered, because you never know. But you're supposed to have the confidence in your strategy that if you continue to execute that strategy, you know you are going to be profitable. The wins and the losses are going to come in a very random fashion. Hence, we are supposed to keep on executing and have a long-term mindset. Unfortunately, us as humans, we are affected by a lot of biases. And one of those biases is what we call the recency bias, right? I was just talking to one of my students today. We're talking about this, right? So, for example, if you take a good winning trade, what comes to your mind? You become so confident, you become overconfident actually, and somehow you think that the next trade is going to be a winning trade. And what do? You size up your account, right? So if you're risking 1%, maybe you pump it to 1 to 2% because you think you are going to win just because the previous trade was a loss. Was a win, right? That's recency bias. For example, if you take a loss, your mind is going to be screaming, it's going to be a loss against, don't trade. Same thing is happening, right? But you have to take the next trade, because the next trade is the most important trade of your life. The next trade is the most important because the next trade can be the best winner, and you don't know that, right? And if you avoid it, it means that you are thinking that you know what's going to happen. In actual sense, nobody really knows, right? So it will affect us both when we win and when we lose. So what's going to help us overcome that is self-awareness. If you're aware of these biases, you're going to actually be able to control yourself and actually keep on executing. You have to execute flawlessly. Your strategy plays out itself over a larger sample size of trades. For example, let me just show you something right here. Look at this. Right? These are the trades that we took this week. GBP USD, GBP JPY trade, the first trade right here on Monday. It was a beautiful 1-to-19 risk reward ratio. Absolutely amazing. Absolutely amazing. I can show you this trade right here. Let me just show you. It was here. It was a beautiful buy, and it went all the way to our take profit right there. Absolutely amazing. Beautiful, right? Well, this is the same kind of setup that failed. It's basically the same pattern. What am I trying to say? On a trade by trade basis, you have no idea what's going to happen. Absolutely no idea. This is another trade that turned out really, really amazing. The NZD card. Beautiful trade, and it dropped beautifully. Same setup. My point is, you are never going to know what's going to happen on a trade by trade basis. There's absolutely no way for you to know in advance. Look, we had 5 losses in a row. The question is that, can you handle these losses? Can you handle 5 losses in a row? Hence, I always emphasize risk less. Risk 0.25 to 0.5% per trade, because you can run through a losing streak like this, and the only thing that's going to make you survive on these particular trades is if you're risking at least 0.25 to 0.5%, because the winning trades are going to come. And when the winning trades come, they are going to take care of the losses. And guess what? As always, the best loser wins. In order for you to be able to catch these beautiful wins, you are supposed to suffer through these losses and still survive so that you can take the next trade without blowing your account. That's the rules of the game. You must be able to become an absolutely good loser, such that when you lose, you don't get affected and you're able to continuously execute. Right? There is a random distribution between wins and losses in any given set of variables that define an edge. That's the rule of the game. The best loser wins. This is how the market works, guys. On a trade by trade basis, you have no idea what's going to happen. No matter how beautiful the setup might be, and regardless of all that, you are never going to know what's going to happen on a trade by trade basis. So that's my message for you guys. As you're going into next week, prepare your mindset. Hence, we always talk about psychology being the most important aspect of trading. Psychology is really important, because in a game where you being the trade going in your direction doesn't mean that you're right, and the trade going against you doesn't mean that you're wrong, right? It's just probability, because you can do everything right and still lose, and you can do everything wrong and still make money. So there's no way of judging yourself whether you're right or wrong, because you have no control over outcome. Regardless of what you do, you have no control, absolutely no control over outcome. So think about this when you're going to next week, so that you come back stronger for the next week, so that you become better and you become a consistently profitable trader. And you're focusing on your psychology 190% of your time. Once you have a strategy, is what you're supposed to do if you are to survive in this particular game. So that's my message for you today. Make sure you take care of yourself, take care of your psychology, and keep on executing your strategy flawlessly. Until next time, goodbye and enjoy your weekend.